Wednesday, February 4th, 2026, Maneco 64, home of alternative economics and contrarian views. Well, there's a lot going on in terms of speculation as far as the Fed's balance sheet is concerned. The new guy that's supposed to come in May at the Fed, Kevin Warsh, he's supposed to be really tough, and he wants to shrink the Fed's balance sheet. I'm not sure it's going to be that simple, especially in the short term. And why is that? Well, we're going to look at why. The main reason is that 2026 is going to be a nightmare year for Secretary of the Treasury Bessent. Yes, why is that? Well, the Treasury has around $9 trillion of owed debt to refinance, and it's mostly like short-term and medium-term debt that was issued a few years ago when rates were really low during the COVID era, and now rates are a lot higher. And what we're going to look at as well is how a gold revaluation might help in all this, and how it might not help in all of it as well. Yeah, that's what we're gonna cover this morning. Before I go further, just wanted to let you know gold and silver are continuing to rebound from those sharp losses we saw last Friday and earlier this week. Right now, gold is at almost 5,100. It's at 50.80. High's been 50.91. So it's up about 130 bucks overnight. As I speak here, it's 7:45 a.m. London time. Silver is traded above 90, got up to 90.80. It's come back below 90. It's at 89.91. It's up almost $5 or 5.6%. Yeah, I'm still very constructive about gold and silver, and you will see why when I speak about the topics that I mentioned earlier. And that's why I'm going to continue to try to stack gold and silver. And you might want to think about it as well. This is not advice. Of course, a lot of you have been stacking and have done really well over the years. But if you're looking to start, or if you're looking to add on, check out our affiliates below in the description. In the US, we're affiliated with Miles Franklin. Give him a call and tell him that Mario or Maneco 64 sent you. One of their brokers will help you through the transaction. Yeah, and here in the UK, I'm affiliated with Gold Investments. Same kind of deal. Call them, tell them I sent you there, or use my promo codes. All the details are below in the description. I also have a landing page for Miles Franklin. So back to Bessent's nightmare and Warsh's ambitious plan, right, to shrink the Fed's balance sheet. Well, the Fed's balance sheet almost reached $9 trillion just after COVID. They raised it from just below 4, I think, in 2019. At the time, they were shrinking it, right? And then we had the repo crisis in 2019, and then COVID, and that went all out the window, and the balance sheet went from just below 4 to almost 9 trillion. And don't forget, prior to the '08 crisis, the balance sheet, the assets of the Fed were around 800 to 900 billion. So a lot lower than they're now. I've got the data now for the Fed's balance sheet. Right now, total assets at the Fed's balance sheet is around 6.6 trillion. And out of those assets, 4.2 trillion are U.S. Treasuries, 2 trillion are mortgage-backed securities, and then they have some other assets as well on the books. They've got the gold certificates, which are valued at $11 billion at a price of $42.22, right? That's 261.5 million ounces that the Treasury supposedly has in its depositories at Fort Knox, West Point, and Denver Airport. I think there's another depository. And of course, there hasn't been an independent audit. But anyway, this year, though, because of all the debt that was taken on during COVID, all that increase in the balance sheet from like around 4 trillion to 9 trillion, a lot of that was to finance the Treasury indirectly, taking on more debt to pay people to stay at home, send them checks, right? So all that debt is coming due. And at the time, of course, the Treasury was able to finance that borrowing. I'm not sure the exact number, but it wasn't as high as it's now, with rates around 3.5 to as high as almost 5, right? Back then it was below 1 and maybe a little bit above 2. So this is going to be a gargantuan effort by the Treasury. And the other thing that's not helping this year, or hasn't been helping the last few years, is that foreigners are getting out of Treasuries as much as possible. They're not abandoning it completely. So they're not going to have as big an interest in buying the new debt because, as we know, and yesterday they passed another 1.2 trillion spending bill to keep the government open. As we know, the U.S. Treasury keeps running huge deficits. I just checked the projections for this fiscal year, 2025-2026, 5.5% budget deficit. Next year, 26-27 fiscal year, around the same. So it's not getting better. These kinds of deficits are usually run during recessions or during wars. They're not normal. So what I'm trying to say here, the Treasury is not going to get any windfall to pay off the debt. They're going to have to roll it over, and that's why it's going to be so hard for Bessent, who's like, he has styled himself as the top bond salesman for Uncle Sam, right? Because that's what it is. You're trying to sell the debt, sell the bonds. And it's going to make it harder as well for Warsh, in my opinion, to try to wind down the balance sheet, because the balance sheet has 4.2 trillion in treasuries. So if he lets that wind down, like doesn't, let's say, treasuries that mature, right, this year that they have on their balance sheet, if they don't buy it back, then the market will have to buy that. And the market, they're not like the Fed, right? They can't just do things out of thin air. They will think about it, and that will mean higher rates, higher costs for the Treasury. So you can see how difficult, in my opinion, it's going to be for Warsh to unwind the balance sheet. And from the end of November, actually the Fed has stopped quantitative tightening or unwinding, and they're actually now doing QE again. So where does gold revaluation come in? Well, gold revaluation would actually increase the Fed's balance sheet. I hadn't really thought about that. I'd been thinking, the Fed can revalue, or the Treasury can revalue to, let's say, 5,000. You'd get about 1.2 trillion windfall from the Fed. How does that happen? Well, the Fed's assets will go up by 1.2 trillion from 11 billion, the gold stock. That would be an asset. And then they would issue cash to the general treasury account, that 1.2 trillion, which would become a liability. So, that's the problem there. they can use, the Treasury could use that 1.2 trillion in cash to retire some of the debt that is due this year. That would help, right? And that would help maybe keep bond yields under control. So that's possible, but the only problem is that they could retire some of the treasuries that the Fed holds that maturing, lower the, let's say, the Fed's portfolio of treasuries. But at the same time, though, the gold stock would be worth more, so the balance sheet wouldn't really shrink. But in the long term, it could help, though, because the fact that the balance sheet would be much more golden, right? The golden age, that might help the Fed really get rid of their treasuries, and they could revalue the gold further, and you could end up having the Fed's balance sheet being basically gold-backed with no treasuries, and that would be very interesting. Would that really improve things fiscally? Not necessarily, because if Congress and the current and future administrations continue doing what they usually do, which is spend and borrow and do deficit spending, things won't get better. They're just going to keep revaluing gold and driving the dollar a lot lower. But there is, I guess, a wild card, and that wild card is that we could see Judy Shelton's trust bond, which would be a kind of gold-backed treasury, come into play here, and that could stabilize treasuries, especially if they revalue the gold holdings that the Treasury has and the gold certificates that the Fed holds. That could stabilize things. So very interesting times. And no matter what, I think what this is showing us is that maybe the power of the Fed is waning. And why do I say that? Well, because since 1973, the U.S. government and the Fed haven't had to touch the gold or revalue the gold, because the Fed's always been able to just conjure up trillions out of thin air and keep things going. But now that's getting more and more difficult because the cat is out of the bag. And if they keep printing and allowing the Treasury to borrow willy-nilly, the dollar is going to be toast very, very soon. So this could be a way. It's not guaranteed. It's not the reason why I think gold is going a lot higher, even though it would propel gold a lot higher, let's say if they revalue it to 5,000, because that would put a floor at 5,000. So gold would go through the roof if they did that. They would, of course, only get the benefit of the revaluation up to 5,000, and the rest of the market, gold holders, other central banks would benefit. So, it's quite a complicated subject. I hadn't realized, I mean, I'm not an accountant, but I was thinking, well, if they revalue gold, they can retire the treasuries the Fed holds, and the balance sheet would shrink, but it wouldn't shrink because the size of the gold assets would go up by the same amount. But I think it would be better to have no treasuries and go back to actually in the beginning when the Federal Reserve was created in 1913 and started operating in 1914. Most of the Fed's portfolio or its assets were gold, and a little bit was commercial paper. That's what the Fed was supposed to do. They weren't supposed to buy government bonds. So maybe that's the plan. Maybe that's why it's a golden age that it's been called. Who knows? And maybe Judy Shelton's gold bond will be a thing. And I'm going to put a couple of interviews here that I've done with Judy Shelton about the topic. She's written a really good book as well, As Good as Gold, about her plan for a gold-backed treasury. Yeah, so interesting times. The underlying problem, though, and the thing that they really need to solve going forward is spending, right? Maybe if we go back to a more gold-focused balance sheet, gold-focused monetary system, that will put a straitjacket on politicians and their spending. But I'm not going to hold my breath. So yeah, complicated subject. Maybe we'll do like a Q&A on Sunday for our live stream, and we'll get Clive on as well, and he's looked into this as well, and we could answer a lot of your questions. I think that would be the best thing. So with that, I'm going to wish you all a very good day. Take care. Bye.